Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnny Market. You all know that drill. Hit that like button and subscribe if you already haven't. Definitely helps out with the algorithms and getting this channel out there. So, anyway, let's get into a couple of things. I was reading an article today, and wow, look at the US Bank. The S&P Global on Tuesday downgraded 5 US regional banks due to their commercial real estate exposures, likely to ignite investor concerns about the health of the sector. And this is the one thing about it. This is a bubble that we are facing that's on the verge of popping and is going to cause real problems in the asset market. Is the commercial real estate bubble. Now, it's not the only bubble, but it's going to be here. And what it also said in this article, in addition to CRE exposure, commercial real estate, the sector is also facing challenges from the rising cost of retaining deposits and higher interest rates. And so retaining deposits because people are going to money markets and everything else. And of course, that's the first phase of this, but when the treasury bubble bursts, that will be even worse. And this is why I always say try to have assets with no counterparty risk. And if you're able to do the cold hard cash along with 20% in physical bullion, and that's why I always say 10% in gold at minimum and 20% in physical bullion. If you're older, maybe just all gold. And it's because it has no counterparty risk. You don't have, it's not someone else's. When you buy real estate and you take out a mortgage, you also have a liability. When you buy assets, a lot of times you're buying someone else's liability, like the bond. So, yeah, that's sort of not good. So, yeah, this is a problem right here. 5 banks, regional banks, were downgraded and they probably will go bankrupt. And these are First Commonwealth Financial, M&T Bank, Synovus Financial, Trustmark, and Valley National Bank Corp. They were downgraded from stable to negative. So I'll post that article below. Interesting stuff, and we are on the verge. And the other thing too is I was looking at this article. Americans are now more negative on the U.S. economy. Of course, it goes to show confidence rose among 55 and over. Of course, they have 80% of the wealth, stock market bull run, housing prices, of course, but deteriorated among consumers making 50,000 or 99,000. Lowered confidence. Everyone else had higher confidence. Well, a lot of people making under 50 are probably living at home, or maybe they're not making anything. They could be on public assistance, so their income doesn't change. And then over, they probably have some assets, and that's probably why this group, the middle class, people making 50,000 or 900 or 99,000, deteriorated because they understand how hard it is right now. So, and then over 55, yeah, well, they're gonna have Social Security soon. They're gonna have a lot of that age group probably has pensions. So this makes a lot of sense in my opinion. And they own homes and stocks and equities. Let's see in 3 years what their confidence is when the market crashes and their stock portfolio evaporates. Yeah, let's see how that works out. So, but what also interests me is I was looking at the market today and shot up. And I remember the Dow Jones was up 80, 90. I'm going to go real quick. Really shot up around 11 a.m. and it kept there. And at 12, it made a peak. And then around 3:20, it just started to tank. Opened 39315. Yeah, it was up 80 points and it closed negative. I'm looking at the Dow Jones. Look at that. That's percentage wise, which closed down 31 points. So if it's up around 80 or 90 and then down, that's a 100-point loss, which isn't all that much. And of course, the S&P index down 14, but that was up substantially. So that's quite a turnaround. And I was going to say, this is what it is. The Fed, even though it's cutting a couple of rates, this is why they're trapped. They either have to go back down to zero and let inflation rise, or they can keep rates here and the market does poorly. Over time, I don't know if it's going to crash yet, but it will eventually, or it just might deteriorate it in 5 or 7 years from now. The stock market's substantially lower, like a slow boiling, but it boils slowly the whole time. And yeah, that's basically what we're looking like. I think the market's close to a top, if it's not at a top yet. I thought it was topping last year, but I don't think it has much longer. As you can see with the S&P Global, they're downgrading banks. The commercial real estate bubbles here. And Americans' consumer confidence, I'll post that. They're very pessimistic because the economy stinks. And a lot of these banks, their liabilities they're coming home to roast. So anyway, that's all I have to say for today. If you like this video, hit that like button, get those algorithms going, and subscribe if you already haven't. And I will see you next video.